Speaking of sector impacts, BofA out with a note today looking at the impact of retailers of tariffs on Vietnam. While the levies announced last week put pressure on profits, analysts say the announcement provides some certainty ahead of the holiday order season. Joining us here on set is the analyst behind the note, Lorraine Hutchinson. Lorraine, great to have you with us.
Hi, thanks for having me.
Thanks for coming down the block.
Yeah,
long commute.
Yeah, appreciate it. It's humid outside, so it's a trek. In terms of, we saw the retailers when the Vietnam announcement was made last week. We saw some relief. Should there be relief, or have we not factored that into forecasts?
I think the biggest news was certainty. And as we were just talking about, these retailers are about to place their most important holiday orders. So they're getting ready to finalize everything for Christmas, which is when they make all their money. And up until last Thursday or Wednesday, they didn't know how much it would cost. So they're placing orders for goods, and they didn't know how much it would cost. That is a very difficult thing to do. And so Vietnam coming out at 20, I think, poses some slight downward estimate revision risk, but really it just gave the retailers some certainty around the price that they'll pay for these holiday goods. And Vietnam is the most important country for most public apparel and footwear retailers. So this was a really big moment. And I think that's why you saw the relief rally, was just finally some certainty.
The most important, even more so than China?
Absolutely.
Really?
Yeah,
okay.
We've been in a decade-long shift of apparel and footwear manufacturing out of China into other less expensive Southeast Asian countries, and Vietnam was the primary beneficiary of that.
What does this mean for the companies themselves, either in terms of passing that on, or how much of a margin hit is this going to be? What are you doing to your models?
Yeah, so they've all come out, effectively all of our companies have come out and said, okay, a 10% universal tariff and a 30% China tariff, here's our new guidance. So we have that all in the numbers. And for the most part, there was a slight hit to numbers, but there's a lot of mitigation. And so the way the 10% tariff worked is about half of it was being taken care of by the factories and fabric mills in Asia. Mm-hmm. And then the other half was being taken care of by retail. And what does that mean? They're cutting costs. In some cases, they're raising prices. And in some cases, they're letting it flow through to the bottom line. So there were some slight downward estimate revisions when they all came out with these numbers. And now with Vietnam at 20, another tens of basis points, not hundreds. So really, it's not Armageddon for the retailers.
Bullish.
Yeah.
Yeah. In terms of mitigation and price increases, how much of, if a sweater costs 10% more, 15% more, is put on that one sweater versus across a portfolio of products for retailers?
Yeah, most of them are saying that they will just touch North America because that's where their tariffs are coming in. And many of them are saying only their higher priced products. They're trying to protect the low end, protect kids, things like that. But I think the important thing to remember is, this is a highly discretionary category. The retailer thinks they set the price, but we set the price. Right? If I walk into a store and this $10 T-shirt is now $12, I just don't buy it. Right? I walk out and I wait. And I wait till it goes on sale, or I wait till I find something better. And eventually, usually, the price comes down to me. And so that's what's happened when we've seen other inflationary times for the apparel sector. The price increases don't usually go through, particularly at the low end. Now, at the higher end, where the consumer has more disposable income, they're less likely to notice $5 on 200. I know that sounds crazy, but $1 on 10 is a pretty big deal.
Not when sneakers. He's
right, but aren't we in a situation where, a U.S. consumer is not doing particularly great, and a lot of U.S. retailers are not doing particularly great? And so at some point, someone's got to eat that. And if margins start to degrade a little bit, we're coming off peak margins for the S&P 500 also.
We are, but we're not coming off peak margins for retail. Right. They've been struggling a little bit, as you said. We've been, if you look at our BAC credit and debit card data, clothing has been negative for 3 years, right? Because the consumer has a lot of demands on their wallet on product they need, right? You have to buy milk. You do not have to buy the $10 T-shirt. You can wait. And so we've seen clothing really struggle for a while. And so I think, especially at that low end, right, where you're a month-to-month spender, if groceries are inflationary, you're having a lot more trouble buying that discretionary item. We've seen a lot of success at the middle, upper middle tier for price increases because that consumer is still okay. Markets near all-time highs, right?
So, Lorraine, first of all, thanks for coming. Some of the names you talked about that have the most exposure were Lulu and Decker, I think Crocs and some others. Yep. Do you think they're going to be thinking, all right, we have to even diversify further. We moved away from China. Now we have to keep doing it. How do they respond to this?
On the diversification point, it depends. You know, we just got a whole other round of tariffs as I was walking up to see you guys. So it depends what happens where. Vietnam at 20 actually looks pretty good right now. So I don't think that there's a lot to be gained by diversifying further. We get a lot of questions about onshoring domestically. It's a very labor-intensive process to make clothing or footwear. I don't think that's realistic at all. So I think the moving around of production is probably behind us, and now it's negotiating with the fabric mills, negotiating with the factories, trying to consolidate your orders so you're more important to each individual manufacturer, things like that. They're also trying to get more efficient domestically with their cost structures and things